a quick introduction to the panel. You know, according to Harvard Business Review, SPACs in 2019, 59 were created, $13 billion invested. By 2021, just the first quarter, 295 created, $96 billion invested in a single quarter. 50%, over 50% of new publicly listed companies in the US today, or this year, have gone out through SPACs. And I'd like to introduce Rabih Khoury, who is the Chief Exit Officer of MEVP. Rabih has extensive career in private equity and advisory, having executed over $5 billion in transactions and raised more than $2 billion in capital, having led investment teams across organizations around the world. And our first panel, once Rabih is going to present a few slides, will be Eddy Maroun, the CEO of Anghami, Fawad Tariq-Khan, the MD of SHUAA Capital, and Hedi bin Mlouka, the CEO and CIO of FIM Partners. And now I give you Rabih Khoury. Welcome, Rabih.
The clicker, Omar.
Sorry about that.
No worries. No worries. So, you know, as the leading late-stage VC fund in the region, we have a very active exit effort. You know, it's not fair to talk about exits when you're an early-stage fund, but at the late-stage fund, we have to answer the exit question. And part of the team at MEVP works, you know, diligently on exits. And SPACs have become an important option of our exit options in the region. Obviously, SPACs are not a panacea for every exit. They have some specifics that may not be applicable to all companies, but because we don't have a go-to IPO market and because the maturity of exit ecosystem in the region still needs to improve, SPACs have become a very important option that we are considering for most of our late-stage companies. Just very quickly, SPACs, how do they work? It's basically an IPO company with cash that will merge with a private company, and the private company will be the, you know, the surviving entity. Currently, SPAC laws only exist in the US, so most SPACs are listed on NASDAQ and on the New York Stock Exchange. The pros and the cons, you know, a SPAC is an IPO with a diligent team that's focused on a sector with capital. It has advantages of these IPOs. Specifically, it takes out the issues of market conditions. However, it is complex. It can be actually quite expensive also. Very important. These are the main components of SPACs. By the way, we have a very detailed SPAC presentation that we will share with you after the conference. These are just some of the important components of SPACs. There is something called redemption. There are warrants. But the key piece I would like you to consider is the PIPE. The PIPE becomes really the linchpin. PIPE means private investment in public equities. This is basically a private round that converts into public equities on the closing of the SPAC. These are really the linchpins of the SPAC, and we'll talk a bit more about what we did with Anghami and how this is very important. It creates basically a pre-IPO product for investors who are concerned about you know, getting stuck in a very, very long-term fund. It gives much more options for people who want to do pre-IPO investments. As Omar said, SPACs, the volumes speak for themselves. We're already double 2020, both in number of these and in terms of value. And also, and this is a bit of a misconception, SPACs is not just new volume. It's taking a big chunk out of the IPO market. There's a hype around SPACs, but you need to consider every SPAC on its own. SPACs are not sectorial, so it depends on the team, on the target, on the valuation, and on the specifics of the SPAC. But again, it's almost 60% of the IPO volume if we take IPOs as the bigger group. Why SPACs? SPACs are the revenge of retail investors in the US who are really locked out of participating in technology. Technology companies in the US have become very large companies. The funds are very large. They really will not take retail money. And as you see here in the US, the number of public companies in the US has been dropping from a peak in the 90s to almost half. And SPACs are a way to replenish this number of public companies. The private markets are becoming a bit too big. We used to list companies when I was on Wall Street at $200 million valuation. Uber did a direct listing, did not raise money at a $60 billion valuation. So this is also another factor that brings in other investors into and then let's start the chairs and we'll start our panel. Hedi, Fawad, and Eddy. Just one extra chair, guys. It's okay. It's okay. It's okay. عد العالم. So we're going to cover very quickly, why SPACs and the role of SPACs in the region. And with us we have Hedi, who's one of the largest institutional investors in the region, who finally saw the light and increasing his exposure to technology, and also launched his own SPAC. Fawad, who heads investment banking at SHUAA, who's been a partner with us advising our SPAC in the merger with Anghami and led the raising the PIPE, which was the first type of instrument in the region targeting SPACs. So we can talk about some very pioneering work we've done. And obviously, Eddy, the founder, the co-founder and CEO of Anghami. He founded Anghami with Eddy Habib. By the way, Eddy is an attorney by training, but his love for music and entrepreneurship gave him a better sense of the future, and he started Anghami. So let's start with Hedi. Hedi, you recently announced a SPAC that you raised successfully. Can you tell us a bit more about why and your perspective on the role of SPACs in the region?
Yeah, sure. Of course, yes. So look, the thinking behind launching a SPAC goes back to what you just mentioned in the beginning, Rabih. The exchanges in the region have not evolved enough to be recipients of IPOs of tech or tech-enabled businesses which are growing very fast, but at the same time, they are not necessarily profitable yet. And as you know, the rules and regulation in most of these exchanges are still have not adapted for the tech business. So if you are a fast-growing company and you need to raise significant capital, then you have two options, essentially. Either you're going to get acquired by a strategic, typically from outside the country. You've seen, Amazon acquiring Souk, and then you mentioned also InstaShop earlier being acquired by Delivery Hero. Or the other alternative is to list outside and go to NASDAQ or to the London Stock Exchange or else. And we think that the second part is a difficult journey for a tech company, and you need a partner, and that's where a SPAC can make a lot of sense. So we also think that the ecosystem here has developed, and we're seeing many more companies which are getting close to the unicorn status, and they will need much bigger funding. And today, as you know, many of the VC funds here are good for, pre-seed, seed, potentially Series A, but when it gets to much bigger funding rounds, it gets a little bit more difficult. Of course, this is changing, but for now, it's still difficult, and that's why there is a big role to be played by potentially SPAC. So we listed on the Nasdaq in July. So we raised $200 million, and we're focused on tech and tech-enabled businesses across frontier market. But MENA is obviously very important to us. And we're doing quite a bit of work now, engaging with many potential targets, and hopefully you'll hear something soon from us.
The investor appetite to invest in your SPAC, can you give us a bit of a sense about how much was the participation from the region?
It was actually significant, surprisingly. But I have to be honest, we leveraged as well a lot our existing investor base, with whom we have built a lot of goodwill over the years, and so probably more than 50% was from the region. The vast majority of it is institutional, and that's actually very good news. I think this is probably the distinguishing factor of our SPAC, and that's why we are very excited about finding a very good target. When you have an investor base who knows the regions you're going to be eventually investing in, it's important, because then the likelihood of them sticking around at the time of the announcement and potentially even increasing their exposure is much higher. And the fact that we also announced that our target company is going to be in the frontier market and it will end up being there means that there will be no surprise at the time of the announcement. I think that's also, again, a differentiating factor when compared to a US SPAC coming to our region. They may surprise a little bit their investor base. They may not be very familiar with the region and emerging markets. So the education process may be a little bit longer and more tedious. Whereas for us, it's very clear from the very beginning that we're going after targets in our region. So only those who are keen on getting exposure to EM and frontier markets are in our SPAC today. So we're expecting really a very high percentage of our SPAC investors to stick around at the announcement level.
Definitely, this will help with reducing redemption. If we can move to Fawad, and SHUAA has also announced 2 or 3 SPACs, Fawad, but maybe we can start a bit with your role in the pipe. SHUAA underwrote, a significant part of the pipe of Anghami. This is a transaction that was complex from the beginning, and from a risk appetite, it was very important to start with an underwritten pipe that de-risks the transaction and takes out the unknown of redemptions. And Fawad can expand on that as the first firm to lead this kind of product.
Sure, thanks, Rabih. So good morning, everyone. 3 things I want to talk about. So I've been doing alternative investing for almost a decade now, right? And we've seen all the trends in technology and also some comments about the difficulty sometimes accessing these transactions, right? So the first thing, when you look at alternative capital that's available for technology businesses, traditionally it's been VCs, right? But if you look at today, there are 2 instruments, right? Venture debt and pipes that we'll talk about, right? So an interesting stat, the US did $50 billion of venture debt last year. We have barely done a couple of $100 million, right? Venture debt is typically 15-20% of a deal. We're 1% in the region. So that's one asset class, very important as you go on to late stages. And then when you look at exits through the SPACs, and for all the reasons we've mentioned, why it's interesting to go public via SPAC through a partner, the pipe becomes very important. Why is a pipe important? As Hedi mentioned, when you have international SPACs coming to do a deal over here, typically your SPAC investors, they have the option to redeem when the deal is getting done. So SPAC comes in and looks at doing a transaction in the Middle East. One of the first questions the investors say, well, if it's such a good deal for the Middle East region, where are the Middle East investors? And what's the opportunity for those investors to come in and participate in this? So again, coming to the alternative capital sources, this is where we're able to speak to investors and say, look, you have the opportunity to come and participate as part of the next stage of growth for Anghami in this case, or for whichever company is going public via a SPAC transaction by coming into the pipe. And the pipe gives you the advantage that you have the ability to look into the company. You know, it's a private investment in public equities, so you have the opportunity to go through a data room, meet with management, understand what the company's growth profile is, because unlike traditional IPOs where you're not allowed to give projections, tech companies are allowed, SPACs are allowed to give projections, and that's very important for tech companies, right? One of the points, Hedi, just to mention on local exchanges not being developed, you see that, right? $2.5 billion of fresh capital has been raised in the UAE alone this year in IPOs, $2.5 billion. Over $500 million of that has come from the retail market. None of them have been for growth companies. Everything has been government-led, dividend yield plays, etc. Right? So when you're a tech company coming forward to list and you're trying to sell the story of Anghami, everybody knows the platform, etc., but selling the growth story, it's important to have the SPAC transaction anchored by a pipe, because it gives confidence of the region coming in, gives confidence to the US guys coming in, and you get a set of investors who are buying into the transaction and buying into the future growth. So we're very excited to be working with MEVP and Anghami on this. Thank you.
Definitely, the pipe is sort of the smart money coming into the SPAC. The original SPAC investors really don't know the final target of the SPAC. So as Fawad said, the pipe really are the people who are supporting in a sort of a pre-IPO product, the target as they merge with the SPAC. Let me move to my friend Eddy, who we've had a very interesting journey as we've been moving together through merging Anghami with Vistas, our partners in the SPAC. Give us some perspective about this journey and how it has sort of changed a bit the outlook of Anghami and also of the sector.
Sure. First of all, thank you everyone. And we really miss this kind of conferences and being, talking to people, not being on virtual and Zoom. Really miss it. Thank you for this opportunity. For us, the SPAC thing wasn't in the plan, wasn't something that we're kind of looking at, and I think it changed the whole outlook of the company. First of all, it raises the profile of the company. Your stock becomes much more valuable, be it if you want to do acquisitions or even attract talent. We also believe that it allows you to think bigger, because I think access to capital is no longer a problem in this case. And us as Anghami, when we started, we built streaming, right? But I think that the whole entertainment ecosystem has evolved as well. And we're really focused on streaming only. I think now with access to capital, with being public as well, I think we can go bigger into being not just a music streaming platform, to be more as an entertainment platform. And here, this opens up tremendous opportunities, especially, given how the region is evolving around entertainment, how Saudi has, is transforming from a country that does not allow entertainment to a country that is, that's putting entertainment on the forefront and is being funded by the government. So I think that going the route of a SPAC will allow us to really execute on a bigger strategy, on a bigger vision, and we're really excited that this is going to be a very big chapter 2.
Can you also discuss what having sort of option on raising capital on NASDAQ will help you in terms of enhancing the data play of Anghami? Anghami collects every day 56 million user impressions. This is a trove of data that is unavailable to any other company in the region. And Anghami has been collecting this data since 2012. As you expand your team in terms of AI, maybe you can explain how the transformation of Anghami from a music streaming business to, as you said, the leading digital entertainment platform in the region, with also the crossovers into brick and mortar options.
Absolutely. So I think that the components and the pillars around Anghami can all be leveraged in a bigger way. Data is one of these. Of course, when we know everything about our users, their patterns, their habits, this will allow us to grow further into not just serving them content, maybe creating the relevant content for them, giving them services that they might be interested in, and so, etc. The data itself is, as I mentioned, one of the things, but also the relationships, again, being involved across the ecosystem, and never forget that the ecosystem is still growing. I mean, streaming started with Anghami maybe in the region, but a lot of things are growing as well, and you can be, part of this growth and leverage this to your advantage as to become involved in the whole, entertainment ecosystem. So all of these will help us really grow, and by being public, you can achieve more of these. You can acquire probably in a more structured manner. Your story and your stock will allow you to also go and think bigger and have a bigger footprint in the whole ecosystem.
Anghami is going to become, the leading entertainment platform in the region, and there are some interesting announcements on contents that will hopefully be disclosed in the coming months that will also change the outlook of the company. If we go back to Hedi, can you give us a perspective about some of the sectors you're going to look at as you start, investigating targets for your SPAC?
Look, we're looking across all tech and tech-enabled sectors, but clearly the two sectors which are dominant for now in our search has been the fintech side and food tech as well. This is where we're finding larger companies, and as you know, essentially we're looking for businesses that are worth at least $750 million pre-money valuation, and these are the businesses that have gained most scale in our target region. So that's what we are focusing on. But other than that, we are open to any tech or tech-enabled business in our target region.
And Fawad, maybe you can expand about how the current legal framework is changing in the region. I know that SHUAA has been very close to what's been happening in Abu Dhabi. There was a first pronouncement around a SPAC framework. Maybe you can expand on how that's developing and on maybe the timing, if possible.
Sure, happy to do that. So I sit on the SPAC committee for ADX in the Abu Dhabi exchange, and one of the things that they realized, and when we had our committee meetings, was what I talked about, right? One of the reasons tech companies it's good for them to go public via SPACs is the ability to give projections and bring the pipe in and so on. And so we've been working with ADX and ESC on the regulations, so together with the lawyers, etc. The regulations were published almost a month ago. I think yesterday the public consultation period ended. We're now going through the cabinet approvals, and we've been verbally told that they're aiming to get the regulations out in January, because it requires certain exemptions and changes to the company's law and so on. But I think that will be a game changer for the regional exchanges, right? And you're already seeing that, right? I mean, this has been the hottest year for IPOs in the UAE since 2014, I think, or 2015. I'm hearing that Tadawul is thinking about it, but they're not progressed yet. We haven't seen any draft regulations coming from there. The good news is they've literally taken the US regulations and copy-pasted those, right? So they're not copying kind of some of the more difficult jurisdictions like London or Singapore at this stage. And I think it will create a good avenue for companies to go public here, especially, maybe the smaller companies, right? You might be looking for $750 million plus EV companies, but we also want to create a market for people over here in the smaller space. There is a lot of appetite for high net worth individuals, affluent individuals to participate. I always say this region has more private wealth than institutional wealth, right? Unlike Europe and the US, where you have more institutions, pension funds, etc. And so giving them access to these opportunities, and that's why I look with a lot of excitement at MEVP's portfolio, for example, of businesses that could get listed here once the regulations come through.
Great, thank you. And let me go back to Eddy, and maybe you can expand a bit on the growth in Saudi Arabia. Music streaming in the region is still very nascent. In the top market of Anghami in Saudi Arabia, penetration is about 6%, while Spotify's penetration in the US has almost reached 30%. So there's a lot of growth for Anghami in its existing markets, but maybe we can speak specifically about the change in Saudi Arabia and some of the outreach plans for Anghami as we start servicing the greater Arab diaspora globally.
Sure. So when we started, streaming was really something very new and no one probably understood. Now it became mainstream. So and we're still at the beginning. As you mentioned, 6% penetration is still very small. And in a country like Saudi that is going big in entertainment, this represents an opportunity by itself. Content is very needed. There isn't enough content, and this is an opportunity by itself as well. And producing and creating the right content with the right stakeholders is also key, because probably you find content, but the relevant content that really resonates with the audience is what really people want. And this is not something that you can guess. You can read the data. Data and the AI here can help you also what to produce and to whom you address and who you bring in to work with on creating the content. So all of these represent really great opportunities. I really also like to highlight the importance of offline in entertainment. We used to be so much driven and focused by digital and all of this, but during COVID, the music industry in general realized that offline and online are really very related, and they converge incredibly. So they realized, even at the level of the major labels, that during COVID they haven't been able to break any artists, because what was there is only digital and nothing happening on the live and on the offline world, and that was really kind of breaking the whole thing. So now what's happening in Saudi as well is that offline entertainment is going very big. We see now Riyadh season, for example, going big on concerts, events, all kind of entertainment. Also, they're building the studios. They're trying to seed everything related to the whole ecosystem, to creating the industry. Same we see, for example, with Middle East. I mean, they're creating like big, serious entertainment events. So all of these represent opportunities for us to really grow within and somehow complete the circle between online and offline. And we've actually announced one of our initiatives, the Anghami Lab, which is in partnership with AdMind. Anghami Lab is actually part of this kind of, creating an online and offline world. Anghami Lab is a studio, but also is a stage and a lounge whereby creators can come and create content. They can also see its impact on the audiences. And for us, it's a way to really support the ecosystem while co-creating content and making sure that this content is being performed offline and online. And the first Anghami Lab is going to be hopefully very soon in Riyadh. So this is among the new verticals in entertainment that we're talking about, and that we believe are going to drive growth, differentiation, convergence. And again, I mean, this is among the things we see that will drive growth, and being public will help as well.
Let's have some final words. Hedi?
No, first of all, I mean, I like a lot what you just said. I think it's a very, very smart way of creating a moat for your business, because obviously in tech, the biggest moat is scale, right? And your biggest competitors are the Spotify and Deezer. They will come and play in your backyard eventually. But this interplay between offline and online is a lot more difficult to replicate for guys like them, because this is where you're creating exclusive content and being on the ground, understanding the culture and having the relationship that you have. They are not going to be able to replicate them easily. So I really like the direction that Anghami is taken in building this network offline and using obviously the digital side for getting more users on the platform. So just as a closing remark, look, I'm very impressed that what Eddy and Fawad have done. These are true trailblazers.
And Rabih.
And Rabih, sorry. Absolutely. And I think they are slowly, they're paving the way for more transactions like this one. And obviously the post-listing journey in the US will be important, because people will be looking at it. So we all hope that it will go very well. I mean, we have very little doubt it won't, but it's important that it does extremely well. And I get many questions from VC funds, but also entrepreneurs and startups who are raising money, whether we think that the liquidity is about to dry up. Is the party about to end? And my view, is that absolutely not. I think it's the beginning. And you have not seen even the bigger guys coming into the region. I don't know if you've seen, you know, even the number of transactions that have been done, the number of unicorns in our region, they're still very small, even compared to other emerging markets. If you compare it to Southeast Asia, Israel and Brazil, the number of unicorns, the number of transactions is multiples of what we've seen in the MENA. So in my view, we are unfortunately trailing a bit, but that means that there's a lot to come and a lot of positive tailwinds for us. So, yeah.
Look, we're in VC, so we're always hopeful, and the rapid change we've seen, especially this year, especially in Saudi Arabia, has been amazing. And irrespective of liquidity, technology has changed our lives, have really added to our lives. We talk about access, you know, and Anghami is the poster child of, you know, access to entertainment at your fingertips, across, you know, online, offline, really connecting with your mood. You know, we spoke about Arabic content. Fawad, maybe you can speak a bit about our interaction with our SPAC partners, Vistas, Jacob, Soraba, Nabay, and their role in the journey of Anghami.
Sure. So look, it's very important to have the right sponsor partner with you, because whilst it seems easy to do SPACs and the fact that many people are doing SPACs, trust me, it's not easy, right? And having the right sponsor with you, somebody that's able to take you through the process and understand what it is that we're putting together. We benefited with Vistas because they're already in the media space out of Singapore. They understand the industry, they understand entertainment, and so it's something I think that really helped guide us. What you see with a lot of SPACs that are listed in the US, I think there's maybe 500 or so that are actively hunting for targets today. Many of them kind of specify the industry or the area that they're looking into. What many of them don't do is specify the region and the geography that they're looking at. And whilst we might be trailing in some of that, I believe that's where a lot of the opportunity lies. So as we get into bigger deals, as some of the companies that you backed in the early days achieve a level of maturity, there's a lot more investment opportunities and growth opportunities available. I don't think liquidity is going to dry up. I think what you're going to see is more products out there, right? Venture debt was not being done a few years ago. It's becoming more and more prominent over here. But still only 1% of VC funding here is venture debt today. So there's a lot more to do in that space. Pipes, as we said, it's the first regional-led pipe. Right, we've actually been looking at pipes for over 18 months now. You have seen investors in the region participate in pipes, right? You had the PIF and Lucid, etc., but you've never seen a fully underwritten pipe coming out of the region, right? And so that becomes more and more important because it gives access to investors that, you know, maybe they don't want to come into early stage, they want to come into the IPO, but they, you know, look at Lemonade and some of the tech businesses IPOing in the US, you don't get access at the IPO price. You get access at valuations that are 50 to 100% pop on the IPO price. The pipe allows these investors to come in and access at a price that's right, and you get the right investors buying into the vision of what we're putting in. Hedi, I look forward to doing your pipe as well when you find your target, so we'll talk about that as well.
Yeah, Rabih, I just want to echo a little bit what Fawad just mentioned. We've asked a lot of the question of, does it matter which SPAC I go with? And I think this is very, very important because $200 million is not $200 million. It's not the same. And your SPAC partner is very important. Ultimately, you're paying him directly or indirectly. And you need to make sure that that sponsor is a credible sponsor, because ultimately he's underwriting the valuation in a way. If I wanted to do a parallel with an IPO, in the IPO is the banks who are deciding that this range sounds like the right range, but in a SPAC process is twofold. The first one is the SPAC itself, so the sponsors behind it, and eventually also the pipe investor who comes and says, yes, I agree that valuation is the right valuation, and this is a great business. So we need to pick really the right sponsor who is credible, number one, and number two, he is the right partner to take you to the public journey, and it's not an easy journey, right? If you want to little bit think of it like marriage, right? You're coming from the private life or where very few people know about your relationship, but now it's becoming public. So it's not an exit, right? And many people think it was an IPO an exit. It's not really an exit. It's a hybrid of an exit, but it's also a new life for you, right? A new beginning, absolutely. I mean, for those of you who think that marriage is an exit, then that's obviously a big problem, right? This is definitely not an exit. So, and you want your sponsor to help you in getting ready for that marriage, getting the right structure, the right governance, the right business plan, the right equity story, and engage and build credibility with the public nicely from on day one. And your sponsor is basically a little bit like your in-laws. You want to make sure they are good guys. You want to be, you don't get to pick them, but ultimately you want them to be good people to take you through a nice journey.
Definitely. I mean, once companies are listed on NASDAQ, this is the most important stage globally for technology. So every component in the company in terms of management, compliance, reporting has to step up their game. Let me just turn back to Eddy, and maybe these will be our final comments. People forget that Netflix used to be a $50 billion company, and when they started investing in their own content, they moved from around a $50 billion company to around a $250 billion company. A 5x growth in Netflix value once they moved from being just a distribution pipe to actually being a content driver where also their AI can really improve their selection of content and how they place content. Eddy, maybe we can speak about what Anghami is going to do on the content side and the lack of Arabic content, and how important the next phase of the growth of Anghami will be, underpinned by the growth of Anghami's own content.
Absolutely. So, as I mentioned, I mean, there's lack of content, and this is going to be a main area of focus moving forward. We've never really created content in a proper manner. Now, what we had is kind of experimental to validate that we can do that in a proper way. And now with access to funding is going to be bigger on our strategy. We're also announcing very soon a joint venture around creating content as well. So we're going to be creating in-house, but also with other labels. And our doors are open to content creators to co-create content, because this is how we can all grow and contribute. So clearly this is also what is not just lacking, but also that gives us this edge and differentiation, right? And as Hedi mentioned, that this is where our local angle comes in, because the tech big giants will not be able to execute, and they do not know, right, the markets as we do. They know the pulse. We have people literally in every city, and not just the data, the connections, as I mentioned. Everything we built will help us really create a more relevant and local product that competitors cannot replicate. And this is validated also with stories like Netflix and so on. And content in general is gaining much more importance recently, because technology and platforms are becoming a commodity, and the main driver and differentiator is at the end content. So this is to your point. I'd like also to mention about SPACs in general and the transaction. Really thankful and grateful to have great partners on board, Rabih and MEVP, SHUAA, Fawad, Muhammad, and everyone. We're really fortunate. And also, of course, the VMAC team, Jacob and the team. We're really fortunate and lucky to have a great team, a great chemistry, great synergy. Everyone is really putting everything, really, and putting a lot of energy and resources and time to making it happen. And we couldn't make it without you guys. So this is probably an opportunity for us to tell you thank you so much. And hopefully it's going to be a great story to replicate, and more exits and SPACs and IPOs coming out of the region.
Great. On that note, thank you. This concludes our SPAC panel.